Is the bear market nearly over? Well, that's the question everyone wants to know the answer. And today, let's have a look on the macro scenario, on-chain, and of course, some technical graphs to understand where we are currently at. Welcome, guys. Welcome. So today, we're going to have a look a bit around everything that's happening in the market right now. And this video will be guided by Jax, that's the trader from CryptoExplorer Pro. So basically, that's a sneak peek inside of what our members are getting every day. So I hope you enjoy it. I hope it can clear your idea a little bit better. And of course, I hope it can help you to get the best out of your investment.
So basically, the first thing we start off with is with a bit of macro. I think the macro is starting to look okay. I think, well, it's not. The macro is starting to look bad, but that's what we want to see. It's bad because it means people lose their jobs. But what we want to see in order for the Fed to slow down on their tightening is we want to see inflation be peaking, and as it's peaked, that will mean that the Fed don't have to raise as aggressively, and things like crypto stocks will start being able to catch a bid. If they can start catching a bid, that will be good for us because everything will start going up again, and the market will just be much better. So we need to see them ease off on the tightening, which I think we'll see at some point in Q4 of this year. So I think we've still got another 3 months to go, but it might be less, it might be slightly less. It really depends on the inflation data that comes out between now and September. I think September will be quite a pivotal month. So yeah, we're gonna it is literally really data dependent at this moment in time, unfortunately. But they have to tackle inflation, they have to bring these prices down. So just referring quickly to some of my notes, what we've seen over the last probably like 6 to 9 months, we've seen that every time Fed Chair Powell has come out and said something very hawkish, the bonds are key because the bonds are the smart money. So you always look at the reaction of the bonds. So over the last 12 months, 6 to 9 months, bonds have, every time Powell has come out and said something really hawkish or been aggressive in his tone in terms of the policy, then bonds have priced this in, and you've seen the price of bonds go down, yields go up, and you've seen things like equities and crypto collapse. So that's what we've been seeing. However, last week we had Powell speak, and Powell said 100 basis points at the July meeting is not off the table. You know, that assumes we get a big print on July 13th. I scroll down.
If you don't know what's the economic calendar, it's basically just jump here, tradingeconomics.com/calendar. And it's a calendar that shows everything economically speaking that's happening. And it's quite useful if you want to stay in the loop of the world. So you jump here, you can select the country. So let's say right now I just select the United States. You can select the impact because there are small events, there are medium events, so like 3 stars are the events that they have a real impact on the economy. And then you can select the date, so like you can see everything that's forecasted for the next month or for next week or whatever. So you can also be better prepared, okay, when some shit can happen, when I should be prepared. So this is a nice information to be aware because lots of times it influences how the market is reacting. So if you didn't know about it, well, jump to it. It's quite a useful thing to know. Now, back to the video.
Here, core inflation on Wednesday, July 13th, so pretty much in 8 days' time, 9 days' time, whatever it is. So if we get a big print there, then Powell said 100 basis points is not off the table. Chances are, I think 100 basis points isn't on the table, to be honest. We then have Powell also coming out and saying that they may actually actively sell mortgage-backed securities. If they actively sell mortgage-backed securities, that will be extreme quantitative tightening. That will be them unloading liquidity, unloading the assets that they bought during the COVID and unloading them into the market, taking the dollars they get back in return and taking the dollars out of the market. So liquidity will be diminished dramatically. That's obviously bad. However, this is really hawkish for Fed Powell to say, and bonds did not drop. bonds basically caught a bid over the last sort of 10 days or so to basically, and what they're basically saying there is the bond market is saying, well, we get it, you're still being really hawkish, blah blah blah. However, the economic data is starting to change. So we've started to see that spending has contracted slightly. You see a lot of the tech companies now are beginning to not look to hire new people. So there are a lot of factors there that are basically telling us that growth is slowing, and with economic growth slowing, bonds become more attractive, and the chances of a recession are increasing. So that I would say there's a really strong chance that come, I think it's July 28th, the Atlanta Fed came out the other day and had a economic growth print of minus 1.1%, something like that. So that would be the second quarter on the bounce, and that would basically be a recession. So if that was the case, the bond market has basically said, we almost don't believe you, Jerome Powell. We're probably going into recession. What are you going to do next, effectively? Because you can't keep tightening into a recession. Obviously, the labour market is still strong, so he can tighten into it. But this is where there's going to be this crunch point in the next few months. So it'd be really interesting to see. But we've seen the bond market get some momentum. So it usually starts with bonds, and then it moves into other asset classes, and it will eventually move into crypto. We've seen bonds move first this week, which is really key. That's effectively it for the macro. We're still watching out. We've still got some headwinds in front, assuming inflation stays high. But the chances are it will start coming down in the next month or two, I would say. Maybe a couple of months longer. But I think it will start coming down. So with that being said, how far are we away from a bottom? Let's go through it. So we'll start here with exchange net flow volume for Bitcoin. We've got some significant outflows from exchanges, which usually is good. That means that people are buying on exchanges, taking their coins or Bitcoins out of exchanges and leaving them in cold storage wallets. However, we've had a lot of FUD recently with regards Voyager, Anchor, Celsius, blah, 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 name a few more. Just seen a question from, I'll come back to the questions after. So we've seen all those companies struggle slightly. So as they've been struggling, I think what's happening here is we didn't see a big bid. So a lot of coins have been taken off exchanges here, but we didn't see a big bid in price. You'll see on this day, June 18th, the volume was not big. It was reasonably big, but to the downside, which means that was selling. So what effectively I think has happened here is people haven't bought on exchanges and taken their coins out and put them in cold storage wallets. What they've done is they've just moved the coins they've bought months and months and months ago off the exchange and are self-custody, they're putting them into their own custodianship, effectively. They're taking hold of these coins themselves rather than leaving them on their exchanges, just as almost a means of being safe, just because they're slightly scared. So I think that's what we're seeing here. I don't think it's any sign of accumulation. If we look now at the addresses, so we want to see these big boys here, addresses with balance greater than 1K. We want to see that they're starting to increase. 10Ks, we'll go through it. They're absolutely crap. They always seem to do the wrong trades. They always seem to be trading against it. So we look at addresses with balance greater than 0.01, climbing, so always adding into the downturn. Addresses with balance greater than 0.1 Bitcoin, continuing going up. So we don't care about the smaller guys adding. We don't care about this. Addresses with balance greater than 1 Bitcoin, adding aggressively. Again, we don't really care about this. Addresses with balance greater than 10 Bitcoin. Again, adding quite aggressively. So we've seen some risking on here, but again, from the smaller fish. Addresses with balance greater than 100 Bitcoin. Not so much there. Addresses with balance greater than 1K, terrible. And we know this here isn't a misprint, but it wasn't organic. So we're still effectively operating down here where my cursor is, and we've come down even lower. So we're much, much, much lower now, and this is the real key people we want to be watching, and they're not risking back on. Addresses with balance greater than 10K Bitcoin, if we zoom right out, we can just see how bad they are. So they accumulate after the all-time highs in 2018, they accumulated all through 2018, increased. Bitcoin went down to 6,000, fell off a cliff to 4,000, then into 3,000s, and then they sold. All the way down to 3,500. They had 20% of the wallets sold off. Even more, about 30% of the wallets sold off, having halved their amount their Bitcoin was worth half what it was, a month or two prior. Here they sold off, and now in 2022 they've been accumulating, all pretty much into lower prices. You want to counter trend these guys. You don't really want to be watching these guys and trading with them. They're just not very good. Let's look at some of the other key metrics. So, market indicators. This is the main one. NVRVZ score. So, the NVRVZ score is used to assess when Bitcoin is over or undervalued relative to its fair value, and market value is significantly higher than realized value. It's historically indicated a market top, red zone, while the opposite has indicated market bottoms, green zone. So green zone has always been very good to accumulate. So we're now seeing, this is the COVID crash, 2018, end of 2018 was the bad crash. And well, this is also a bad crash, but we're in this green zone finally. So it's really important that we start recognizing we need to consider possibly buying soon. I know that's not nice to hear because you think prices are just going to keep going down, but the time to be greedy is when others are really fearful, and when prices are high, when others are really greedy, that's time to be fearful. So if we look at other indicators such as the net realized profit and loss, we can see here we've got the let me zoom out a tad. Zoom in, sorry. So we can see here green is profit taking, realizing profits, red is loss taking, realizing losses. We can see here that this was the capitulation I was looking for. I've been saying for a long time we want a capitulation which has significant increased losses. We want to see that there's been a major loss taking in the ecosystem, and that would indicate a strong number of weaker hands have been flushed out. And we were saying here that these spikes here, the loss taking wasn't enough. It wasn't even as much as the June one of last year, of 2021. So again, the losses weren't as big. This was the one that confused me slightly, because I thought, maybe we have flushed out a lot of people, maybe we haven't. But I would have wanted to see losses down in here, and then we've got this. So we're starting to see all the signs that I would have wanted to see to make me start feeling comfortable again to buy back in. So let's have a look at one more. Net unrealized profit and loss. Let's zoom out. Net unrealized profit and loss. We're starting to get in this. We're in the red territory now. So this is where we need, all of these things. You can't argue with this kind of data. This is just sat there looking you dead in the face. The last times we saw red prints was in COVID. I think this will come down slightly more. I do think it will, but I don't think we're going to a 6K, 8K Bitcoin. I think, I would place a big, if I could find a place to do it, I'd place a really big bet on us not doing that. But who knows? Let's see. I think this can come down more, but we're starting to see the right signs that we're close to buying. So I don't think we're too far away now. I really don't. I think we'll see, as soon as we start to see inflation prints coming down, we see one or two, we see one be lower than, I think maybe 8%, and then we see one again lower than the next one that was, below 8%. I think that would be great. This is now time to start risking back on. I think the Fed will then stop. They'll then know to not be anywhere near as aggressive as they have been. So I think it's the perfect way to see these metrics and align with the macro. So the last few weeks I haven't felt as confident. I've done loads and loads of homework on the macro, and seeing all these charts now, I feel much more confident. I can put, what I'm doing in the group. I think I will be buying in pretty soon. I don't know when it will be. I think it'll probably be at some point. I think it'll be September. I've got a funny feeling it'll be September. I think we'll have inflation prints. We've had a few inflation prints then. You're starting to see the economic data coming down, suggesting that the consumer isn't as strong as what Powell is saying. So I think we're really getting there. I really do. All the metrics are starting to say we're bottoming. You see absolutely zero positivity. Even in the chats today, I saw a lot of you guys calling for 6K, 8K. I can't see it. I can't see it. So, and I sat here through 2018, I sat through 2019, I saw us go from 20K all the way down to 3, people saying, we're not going to go below 5K, and we chopped around, it was in here, we chopped around in 6K for ages, and we were still sat in this orange zone. This is exactly what I'm saying. So even though it felt like a bottom, that we found some really great support, it collapsed. So I think now we're starting. There is no support. People just keep calling for lower and lower targets now. So I think this is becoming much more clear to me that you could even begin dollar cost averaging now. That's how I think we're really that close. So I'm not buying in now. I'm still going to wait a little bit. I'm going to still wait for the data to come out because I think there can be some more twists. There's always going to be twists and turns if we're the data dependent. So for now, I'm watching these metrics, but I feel like they're good. They're pretty close. I want to be buying in at these fearful points. I just think it's still a few weeks away yet. But let's see. If we look at
and for those participating on the treasure hunt, here we go. The third clue of the month.
Our favorite chart, the realized cost basis, it's well underneath now. So which is obviously great to see. I'd love to see us come down and hit like a 16, 13, somewhere in there. But I'm not even sure it's going to happen, to be perfectly honest with you. But who knows? We'll have to see. Right, charts. So I've zoomed out and gone to the 12 hour. We'll start on the S&P. So the S&P is likely probably to come down to around 3,500, 3,300 is my target area. Let's get rid of the volume because it's annoying. I think we'll see ourselves somewhere in this range because we still have stocks to come down. And I think that'll be the last thing that pushes down crypto. I think that might be the fuel that gives it that last leg down. So the S&P are key things to track, like the NASDAQ, key things to track. What we've seen over the last 6 to 9 months is we've seen that when stocks trade, their multiples have come down. We're now seeing their estimates for earnings are likely too high. And analysts are now saying the earnings need to come down. So if, they haven't alluded to it yet, but there's been big questions over the analysts' earnings predictions. So it's likely going to be the case that estimated earnings will come down and that will begin being priced in, and that will be the last leg down in stocks. So what we'll see is the last leg down in stocks because earnings are being revised, and they'll be revised lower because obviously if we're going into an economic recession, people aren't going to be spending, the margins aren't going to be as great, so earnings are going to be lower. If earnings are going to be lower, that means that the stock price is going to be revalued lower. If that's going to be valued lower, the likelihood is that other assets will be valued lower, such as crypto. And I think that will be our last leg down. And I think it will be in the next few months, next few weeks, next few months. I think it's somewhere in there. Again, it's data dependent. We have to be driven by the data. It always takes either much faster than we think or much longer than we think. But I don't think this is the case of being a year away. I've heard many other people say 6 months ago, we've got one more all-time high to do, and I said we're not doing it. The data wasn't there for us to go and do it. I'm now saying the data I don't think is there to go to a 6K, 8K Bitcoin. I would really bet heavily on us not going there. If I could find someone to bet on that, if anyone can send me over some form of like poly markets or something like that where I can bet on that, I'll go gun ho on that. I really will. But yeah, let's see. Let's go into crypto now. I think crypto can be tied to like a Bitcoin, and that can be its last leg down, but we'll have to see. So, we have done a trade on Bitcoin today. It was a short at this local horizontal resistance. I feel like this can come down, at least test 19K. I think it can probably come down and retest somewhere here at the 17s. It does look like a typical, it looks very similar to me to this. Big move down, range bound, was above the support, couldn't really get above, then broke really nicely above, came back down, retested, and before it just capitulated lower. I think we see something like that. Do we pop up here? Maybe we do pop up here. I'm not really sure. I could see us coming along here for a longer period of time and then collapsing and doing one move down, something into like a 16K, maybe a 14K, somewhere in there, and that basically being it. But again, we're data driven here, so we have to see. But at this moment in time, I don't think there's loads of fantastic trades around. I think it is a case of just assessing the data. But I think this is a typical bear flag, or looks very similar to a bear flag, that I do think will eventually break down. How high it goes in here is difficult to know. I think shorting into a local resistance is a half decent play. We've got a tight stop loss on it, so it's okay. If we do go slightly higher, I would consider shorting somewhere where I see a hidden bear div. If this spike here goes much higher than this high here, and price doesn't go higher, then that'll be hidden bear div. That if we do get stopped out of this trade, I'll play the hidden bear div, assuming we get it, for the breakdown all the way down to here. So it's about trying to catch the right one. That's Bitcoin. Let's look at ETH. Just take a drink. So again, it's a similar story to ETH here. You came down significantly, formed a bear flag, broke down but held the sort of long-term support, and then you've crashed below. As we've crashed below here, I do think this is not, it's not a good one because the flagpole is not good, but it is pretty much a bear flag. What I'd be looking for now is either a breakdown of the flag and the long yellow master uptrend line, or I'd be looking for that hidden bear div again. So again, you could even have this as your play, have a tight stop loss somewhere in the 1160s, 1170s, and then you could replay for like 1250. But again, you're better off playing really small here and just averaging up your orders, knowing that the macro is very likely to take you lower. But again, I don't think we're going to go drastically lower. I think it could be lower / range bound. Yeah, that's my opinion on ETH. I'd rather play the Bitcoin play though. I just think with that local horizontal support there, I think that's providing another resistance that could possibly help us send it lower and us basically profit from it. So that's why I picked Bitcoin over ETH. And ETH has this long master uptrend line as well, which doesn't scare me to a degree. I just think I wouldn't want to be shorting into a long master uptrend line. You know, I wouldn't want to short that sort of like support. FTT, let's look here. So again, I'm surprised this has held up reasonably well. Again, it sort of had its crash in here, but the thing you have to realize with these FTT, BNB, they're exchange coins. So the exchanges that sort of like have some supply of those coins, they don't ever want to let them go down to like, they're not ever going to let them drop significantly. There's going to be so much market making going on to stop them dropping. Because they want that coin to hold some value. It want it to gain market share. If you go on coin market cap and FTT is 30, but all the other is 30th, and all the other coins are going to drop over the next 3 months, and just by doing a great bit of market making, you can take it up. You know, you'll still lose market cap, but you might be able to take it up to 20th market, you know, highest market cap, simply because you haven't lost as much in comparison to other coins. And then all of a sudden, when the bull market comes back, your coin is ranked a lot higher. So, you know, there's going to be a lot of market making done by the exchanges to keep their coin price afloat a lot more, or to just keep it not dropping drastically. So FTT, I don't see any great opportunities. There's no real bullish or bearish signals here. You'd want to see a break of this local red downtrend line, but you know, we have already had one already, then a retest. It's difficult to play it. Again, liquidity is not going to be that strong here. It's going to be dominated by the market makers that, you know, are probably inside FTT. So for that reason, I probably won't play this. So I did want to play. We did it as a day trade. Probably been stopped out of this one now, actually. But again, this one wasn't too bad. This is a bear flag. You know, this is going to break down. So you could even up your stop loss. Consider playing this one, because this will probably be a bear flag that breaks down, to be honest. Again, we got this move into the overhead resistance. We've created a hidden bear div here, so you know it was a number of them as well. For that reason, this here was probably a good short. I think here forming this bear flag is also another good short. Yeah, that's my opinion on Solana. Solana has just absolutely tanked the whole time. Yeah, it's terrible. Even now, to get like a 20% move up, it's gonna take you to what, $40? You know, how are we gonna get back to 140? This might be years before this recovers up to like a $250 level. So again, once liquidity comes in, it moves. You know, as soon as you can start getting up to $100, and then all of a sudden you get a 12% print that day, you go from there to there. It's a big gap. But for us to go from 34 up that far to like 45, you need like a 50% move. So it's It's just the liquidity is so bad at the moment. That's what you're fighting against. That's why for trading, you're best off probably sticking with the major caps like a Bitcoin. But there can be opportunities in these other plays. They're just much harder to call, much harder to predict. BNB, another exchange coin, again done reasonably well here. I'd be interested if this done a hidden bear div. Can this pink line here make a high against these ones in here? Can the price then not make a high against it? I think if price went to like 235, 240, you'd get a hidden bear div. If you got that, I'd short it. So for now, I'd love to see it reach and hit this 50% channel line, probably reject at the 50% channel line and short into that and have it create that hidden bear div. Yeah, that would be a nice play actually. I would. I'm going to look more closely at this because I would play that. MATIC. So still managing to find some support. I've tried to break it down into a few different, one support here, and then you had this downtrend line, which is now flipped and probably become a support, and now it could pop. But you're coming into the resistance of the RSI-based MA. I think here, because the market overall is weak, you wouldn't really want to long it. But out of these options, would I long? I don't know. I feel like the best bet here would be to leave this, but if I had to pick a direction, I would probably pick short, knowing if it did go higher, I could fill more orders going higher and just wait for it to break down. That's effectively what I do. You'd have to do really good risk management on some of these plays because the volatility is so strong. So when the volatility is so strong, it's so easy to be shaken out of your positions. So you've got to be really careful. But overall, I think this is not really worth the play. I think Bitcoin's worth the play. Solana could also be worth the play. And BNB we're watching for now. But that's it. Polkadot. Polkadot again. Polkadot and Chainlink. I love them long term as like projects we could buy into in the bull run. But Polkadot and Chainlink now are just struggling for liquidity. If you look at them, they keep creating these hidden bear divs. Higher highs on the oscillator. Lower highs in price in comparison to old oscillator marks, and we've just dropped so much. So it's down to $7, having been, I think we sold out Polkadot early January. Early January was up here at $31. It's now down at $7. So you've probably saved a good 80% there just by selling the asset and not bag holding. Chainlink was the best one. I think we sold at sort of $28 or $32. That was, I think it was somewhere. It was into this orange box. That was it. 28, not 32. Sorry. So it was into this orange box, which was hitting this downtrend line, and it was perfect with the orange box. So it played really well. Again, you had some liquidity here. So when you had this is a great example actually. When you have the liquidity in the market, and back in December, we did still have some liquidity. So when you've crashed, people think they're getting in on a dip, especially when we had this leverage flush out here, which was December 4th. Yeah, December 4th. That was a Friday night. I remember it. I stayed up all night to babysit my accounts because of this. It was that frightening. Bitcoin, I think, went from 53 to 41. I'm pretty sure it was a Friday night. I remember it quite well. So this December 4th, again, there was liquidity here. So look how low the price went. So it went all the way from, in a 12-hour window, 23, all the way down to 15. So you lost a good 40% there, and then you closed back up at 18, 19. So you gained and then a good 20% from there. But then we were able to get the liquidity in. So bids came in thinking they bought the dip, and price moved up quite significantly because liquidity is there, because bids are there. Once all that stuff is there, price begins to move, and we're waiting for money to come pouring back in. At this moment in time, because the macro is still so bad, even though I think it's turning soon, and I know a lot of people are calling for worse, but I've really done my homework on this, and I do think it's starting to turn soon. Again, I'll be dependent on the data that comes out, so I am slightly jumping the gun, but I'm jumping the gun in terms of assuming this data comes out, then these things are also indicating that we could start, we could be there. So if the data that comes out is lower than what it's expected, then we could be there. So you're sort of trying to jump the gun, but just be apprehensive with the homework you've done in terms of, I've done a decent job here. We know what we're waiting for. Let's see what comes out. So yeah, back to this. This here, it had the liquidity, which is why we was able to get up and fill the orange box, because there was the bids there, the orders were there to send price much higher. All of a sudden, when it collapsed again, there's no liquidity left. People are out. People think, oh Christ, I've been killed here. In the space of 10th of January to the 25th of January, in 2 weeks, your bags have gone from 28 to 14. You've lost 50%. So a lot of people would have, capitulated a little bit there in terms of their mentality, in terms of, I just can't take this anymore, which is why we were never able to get up and do another orange box. So again, these are my levels, and we weren't able to get up and do this orange box because there wasn't the bids, there wasn't liquidity there to do so. We're now seeing here, you don't have the bids, you don't have liquidity, you just can't make up higher ground. It's really difficult to do so. So again, we just have to play it. We have to wait for the macro to change. And again, it's getting there. The economic data that's coming in is starting to suggest that things are cooling, and not just cooling, but the music has stopped. Let's put it that way. The music has now stopped. It's now starting to show signs in the economy, which is what we want the data to start showing, so that Powell sits then goes, oh crap, the economy is starting to realise this. I now need to actually put on the brakes, and I can't. But he has to raise rates aggressively now before the economy realises how bad everything is, in terms of people realising how bad everything is. He has to raise rates so aggressively that it's almost, that he can tame inflation quick enough that if he did it over a long period of time, he would hurt the economy too much, and he wouldn't be able to keep raising rates, because he'd get so much pressure from people to not keep raising rates, because the economy would be so bad. But whilst the economy's still been in an okay spot, he's been raising really aggressively so that he can try and tame that inflation, so that by the time he does really collapse the economy, he's done. He's done with his job. He doesn't have to keep tightening into it and keep coming under mad pressure from the from the normal people. So yeah, I think we're starting to get to that point now where the data is starting to suggest that the economy is really slowing down. Spending is less. People are now using savings to pay for the goods that they paid for last year, because their wages are not keeping up with the inflation. So, and they can only do that for so long. You're now starting to see inventories are increasing. New orders are not increasing a lot, in the same ratio with inventories. So you're starting to see demand come down and will re-meet supply, and that will bring prices down, and hopefully things will return to normal. We will be in a recession at that point, but the hope would be that the damage is done. It won't be a soft landing, but it's not going to be one of these recessions like 2008 that takes years to get out of it, and the Fed have to stimulate from the get-go and really pull everyone out of the mud. It's going to be one of these ones where I think they won't stimulate the economy for a little bit. They'll let the economy just digest it all, and I think they'll stimulate a very small amount, just enough to get people, off their feet. And it's not going to be this real gruesome process. I think it'll be something that's I just don't think you're going to see loads of people on the streets, and inflation. Unemployment's at 3.6%. In 2008, we saw unemployment much higher, where people couldn't pay their mortgages and all that kind of stuff. I don't think we're going to see that kind of case this time. I think we're just going to see that people are really feeling the cost of inflation, and they can't get the goods they want, so there's no spending in the economy. But I don't think I don't think there's going to be this mad unemployment where people are turfed out of their homes and can no longer pay their mortgages. I think unemployment will rise, but I don't think it's going to rise to the point where you had similar devastation to 2008. I don't think it's going to be like that. So who knows what we're going to get, but that's sort of my consensus I've come to after doing all the homework on the macro side of things over the last 2 weeks. We've covered some macro today, we've covered the on-chain data, and we've covered some charts. So, we've got our eye on Bitcoin for the short. Solana I'll update us on. BNB I've got our eye on that, because I think if that can go higher, show it again. Oh crap, sorry. If that can go higher, make a lower high in price, but higher in the oscillator. Bitcoin looks like it's slowing down, then we'll try and take that one as a short as well. But yeah, that's it. I hope everyone... Oh no, sorry, I've got one question to answer. Do you think that after Powell's speech 13th July, Bitcoin will go down or up? If I had a crystal ball, I would tell you, but I don't. So Powell's, I don't think Powell's 13th is not Powell's speech, is it? No. No, that's just the inflation print. Um, we have at this moment in time, no, that's Bullard and I mean, we had one of his speeches last week, but the key thing to look out for this Wednesday is this FOMAC minutes. That will tell us the minutes of the last FOMC meeting. That's probably the key thing to watch out for this. Well, that's the key thing to watch out for this week. And then going into unemployment is big one. Oh, sorry, that's this week as well. I thought that was next week. Unemployment is big this week also, and then inflation is the big boy next week. That's the sort of key one we're looking at. And then going into that, you have, this will be interesting for housing because we want to see that with housing, there's still sales going through. We don't want to see the inventories are shooting up and sales are going lower. See what else there is. New home sales on the 20th, that's miles away, it's 26th. Interest rate decision was 27th. Yeah. So we'll have to see. We'll weigh it up closer to the time. But yeah, there's, to answer your question. Sorry, his Powell speech was last week. I went through the key things we're looking at over the next 2 weeks. And yeah, we'll be data dependent. We'll go off that. But I think I've digested the macro well, and I think I've delivered it in a way that hopefully is reasonably understandable. If I haven't, I can explain in the chats. But yeah, economic data is looking weaker. Powell has to get his rates done sooner rather than later because the data is starting to reflect that, hey, we're going into recession here. Things are going to slow down, but Powell needs to tame inflation. So he's got to be aggressive in those rate rises now. But he's only got a couple more to do, he's only got probably 2 more aggressive ones to do. So after that, how much more worse things can there be? Bearing in mind the markets usually bottom 3 to 6 months prior to the sort of worst part of the recession. So I think try and build that timeline now and work out the buying opportunity for us as a bottom probably isn't that far away when you think Powell might have another 2 big ones to do in terms of raising rates. Might be one in July and then one in September. Again, it'll be data dependent. If inflation starts to come down over sort of August, September time, he might not have to be as aggressive in September and he might only do 50 basis points in September. All of a sudden then, things are looking much more rosy because he's coming towards the end of that tightening cycle and now it's just a case of dealing with the economy. It might not be too difficult to actually deliver a soft landing, dependent on if inflation comes down, because it will mean Powell can calm down. And then if Powell calms down, then all of a sudden things will start to get a bid. And that's what we care about. If Powell slows down, people will start risking back on again. Crypto will be able to catch a bid, and hey ho, we can go maybe not another bull run, but prices will hold up, and then it'll be news driven. And once it's news driven, people will start coming back in once they see prices moving a bit more, and then we can start getting some liquidity, and then prices can go up. Assuming nothing worse happens, like another war or anything like this. But yeah, that's it. I hope I've delivered that okay. If anyone doesn't understand anything, there's a strong chance I go on loads of tangents, so there's a strong chance I didn't explain it well. So if it is the case, message me in the chats and I'll do my best to explain it in a more clearer way, written down, rather than me just going off on crazy tangents. But yeah, that's it. I hope everyone has a nice evening. Thanks for watching, and I'll see you all in the chats either tonight or tomorrow, whichever. Cheers, everyone.
And that's it, guys. I hope you enjoyed this video. I hope it could clarify a little bit if you had some questions. And of course, if you want to know more about it, don't hesitate to send some questions on the comments box. And if you'd like to be part of a CryptoExplorer Pro community, I'm just going to leave it here an invite for you. So if you jump to pro.cryptoexplorer.cc/become a trader, you can give it a free trial. So you just open here, you go over here, and you can start a free trial straight away. It's 7 days, no commitment. You can start it and cancel anytime, and you have access to this kind of videos every day. You get a full community of traders and investors and people talking and understanding everything that the market has to offer. So if you're already an experimented trader or someone want to learn more about it and wanting some guidance and exchange some ideas, well, I hope to see you soon on our crypto community. All right. So thank you very much for watching these videos, guys, and see you next time. Thank you so much for watching this video. Please do not forget to subscribe to the channel and give it some likes so I can keep producing at this nice pace and bringing more news about Web3 to you. See you next time.